Hello and welcome at Stocks Advisor channel. Here at our channel, we are looking for interesting buy opportunities for US-based stocks. Today's episode, we will talk about KemPharm Incorporated, traded at Nasdaq, ticker name KMPH. Well, KMPH today was showing a nice upwards move, but it finished with actually decline, although higher than the previous close. So we see therefore this dark candle, and of course the next question is where further this could go, what could we expect from the company, and wait with it, because in general you see that the company was experiencing a very nice let's say recovery after the dip that took place starting by mid of December of previous year. We saw a major decline also with the drop based on news, and now all the way to with the lowest almost to 5, which was coinciding with the previous support levels that were observed in summer in July, end of June, and at the level of $5, forming this way the level S1, let's say very strong support level S1. So of course next question is how further to trade here, what can we expect and what is happening. So let's do a quick analysis for KMPH. First of all, as always, we have three moving averages depicted here at our daily charts. Here on the left, you see their legends. These are moving averages 20, 50, and 200, being green, blue, and red line correspondingly. So now what we have, as I said, after a major decline that took place from mid of December all the way till actually, let's say, 10th of January, and after some stabilization, of course, the price is now recovering, and it's completely recovered to the tip of the previous triangle, which was taking place from let's say August to end or almost end of November. So there is a triangle here, you can see it. Let's name it R1, R2. And why is it very important to pay attention to this triangle? Because this was actually very strong accumulation after the rally that took place below 3, and actually almost from 3 by mid of June, and then went all the way to almost 13 plus. So this creates a very strong trading channel for us, and to be more precise, the trading channel could be, let's say, assessed like that. And this is the trading channel S1T1. So actually, and this is here, this is kind of a safe volatility range or the safe trading box. So within this box, you could expect, if you are sitting in it, that one moment the price will come there and you will at least get it back, or you make further profit. So this is the so-called sweet channel, sweet spot. So if you enter there, you should be very safe with respect to return of your funds. Of course, if you want to have a profit, it's a little bit different discussion. So now what we have here, the is returning to this tip that we observed by R2 flag, and we are sitting on it exactly. And that's where also the price finished today. So it's the level of 980. So let's call it the channel S2. So now what's next? Of course, here the situation could be still such that we go for a bit more correction, because if you look at moving averages, and this is usually what happens, have this fast recovery of moving average 20 that took place by beginning of February. The price goes on, and then it usually observes major decline. But now, 2 trading sessions ago, and even 3 trading sessions ago, if you look carefully here, we had a red-white combination, and moving average 220 worked together as a support level, when moving average 50 worked as a very strong resist line, but then pierced and still worked as an attractor. So what could be still happening here, because moving average 250, still this blue line, works as a very strong attractor, but moving average 20 and 50 works as a very strong support. So this is kind of convergence of resist attractor and support repulsor. So it could be that the price will still stuck here a little bit longer, so a little bit go lower than S2, and actually will sit between S2 level and a little bit higher. So and actually between moving average 200, and this will create for us a very nice first for the stock to play. So it will be just moving average 200, that level. Let's put it here with this green line, and let's call it S3. So S3, S2 would be the first channel to enter here, because if the support levels will be stronger than this resist pressure from moving average 50, of course, after small decline, we should recover. This way we will have a very small skew W formation. So this would be the first, and this would be the second, and then we could pierce T1. So it would be skew W formation if it's immediate recovery. So that would be the first therefore level to enter, hoping for this pattern. If this pattern is confirmed, we can make it. So it will be between 878 and to actually 980. So that's the level to enter. So that's the first channel to enter here, and this is how you could be, let's say, the trading. And again, when it means you can enter here, it doesn't mean that you should immediately buy at 980. Of course, you need to slow. So the funds that you allocate to enter to this channel, you need to enter at least with 2 portions or with 3 portions. So this way, your average down price within the channel will be somewhere in the middle, and in the best case closer to the bottom of this channel. So with this being said, if the price repulses, the first resist might be seen at T1 line itself, and then it could be at least 10 to 15% profit, and there we advise to take your profit. So at our channel, we always, speaking of profit taking, we advise to take 10 to 15. So that's our opinion. In our opinion videos, we give this profit estimation, because that's also how we do trade. And usually this is very safe technique, because if you can trade consistently, repeatedly with this profit, believe me, even if you do it within 1 month, within a year, you will make by every month 10% profit taking. You will make 2, 3, even more times portfolio, funds increase, because this is going exponentially. It's adding up non-linearly. So it's better to be consistently trading with fixed profit taking rather than trying to become rich from one trade. This is usually risky, and it's a reason for many traders to fail in the first year of their trading experience. So it's not a casino, it's a trading. So have your plan and develop it, and be consistent, and know how you trade and what you do. So with this being said, that's the first level to enter. We still need to be prepared for possible further decline, because there is another strong, possibly negative channel forming, or let's say the ceiling from the top forming is this one. Let's call it R3. And if this is confirmed, also today we started at this level, and it was formed like 5 trading sessions ago. So we start, and even further, you see these 2 candles confirmed it. So today we started from it, but we declined. So it really works as a very strong further support resist level. We could go lower, and then of course we need to average down. So we need to prepare to average down here to still to exit with a profit at this trading opportunity. So therefore the next level to enter would be, it's clearly seen here. In that sense, it's very simple and very visible. It's between 6 and 7. So this would be another level. So the first average down opportunity, so-called technical average down, meaning that technically without any bad news coming in, it's still possible to be there. And therefore it will be just let's say between $6 and $7 to enter. Again, the same story. You start entering smoothly, slowly. It's not that you immediately enter with all your funds allocated for this channel immediately at 7. So try to at least go a little bit deeper to this channel, so at least your average entry would be 6.5. So with this being said, of course, again, it could be repulsing the price and still could be going again to R3. And with this, if R3 is confirmed, still you will make profit, target profit 10 to 15%. It still could take longer a little bit and pierce further upwards. Then, of course, the profit will be even higher, but it's beyond this discussion, because then we really need to look further how it trades, how it goes. But at least 10 to 50% could be done here. And then the third pillar of our mixed analysis, it's a negative catalyst. What if negative catalyst kicks in? What if company is really shut down completely? What happens then? How we trade? Well, then we need to be prepared for a very strong average down and actually going to some historical previous lows, and in that sense this would be a very strong support level that was formed by end of June, beginning of July, and actually as this one and this volatility level, so just below the S1, although S1 will work also as a very strong support. So this would be the last entry, last averaging down, and this is really based on negative catalyst. So if you write it here, first we'll make it from, let's say, 385 to 445. So why we say that low? Because if you look to the previous, the distance between the first channel is more than or almost 2 times, and it's not that we predict price to decline that low. Some people sometimes misunderstand it. This is what we do as a mitigation. So we mitigate risks. We do not predict it go that low. We mitigate if it go that low. And the reason for that is analysis approach that we follow at this channel. What does it mean? It means that we take into account 3 things. It's first, of course, it's a technical analysis. Second one, it's non-linear averaging down based on resist support channels. And the third one is taking into account possible negative catalysts, simply speaking, bad news or something else that could come from out of the blue. You cannot expect it, you cannot anticipate it, but if it comes in, it can kill your entire portfolio, all your trades. So you need to prepare for this as well, and that's why we always discuss this last average down. The third one is usually reserved for these negative catalysts, because if you take into account all these risks, you mitigate them, actually what remains for you is just take your profit. So with this being said, that's the numerical card how to play with KMPH. If you are more for, let's say, graphical representation, you can look at this one. Just make a screenshot of this one and you can use it as your trading card. And speaking of how non-linearly average down, it's still very, let's say, positive. So it's a standard 1 to 2. It's not always that we advise 1 to 2 in this channel. Sometimes we go different one if the stock situation is a little bit different, but here it's still very classical trade. So it means that you can play with 5 portion approach, meaning you can buy with 1 portion in the first channel, then you can average down with 2 portions in the second channel, and if negative news kicks in, then you can again average down with 2 portions in the last channel. And again, speaking of how to enter within the channel allocated, for example, in the second channel you would like to enter with 2 portions. It doesn't mean that you immediately buy at the 7. It means that you start buying at the 7. So these 2 portions you can split, for example, in 3, like 1, 2, 3, and then when you start entering like this, it means that you will be entering here like 1, 2, 3. So your average price within the channel will be in the middle. So this way you will make it the best entry, the best average down possible. So this is also important to keep in mind. So with this all taken into account, it could be quite nice play, actually, in our opinion, and we also will be watching KMPH at our channel. So with this being said, that's all for the moment. Good luck with it. Also, please do not forget to subscribe to our channel. This way you will not miss our new videos and new interesting discussions for US-based stocks.